Hey, welcome. This is Dana Gray from Remax Gold Augustine Associates team, along here with David Parker from Loan Pal. David, thank you for joining me.
Hi, Dana. How you doing?
Great, great. Today, I was so happy to have you a part of this discussion. There's been a lot of questions regarding forbearance, particularly a lot of questions about the market in general, but I thought since I had so many questions coming in from clients and friends and people that I chat with on a regular basis, I figured I would do a Zoom call recording just to share with our clientele and public to give from your perspective as well as mine what's happening in the market. I'd love to start off with you if that's okay.
Sure.
So a lot of the questions we're getting, as I referred to, are regarding forbearance. So why don't we start with what is forbearance and who qualifies?
Got it. Okay. So, and again, I appreciate there probably is a lot of questions on this, and because this has happened so fast, right? I mean, 7 weeks ago, we didn't even see this coming 7-8 weeks ago.
Right.
So the fact that we now have some protocols in place, the forbearance piece was under the CARES Act that was put out as part of the federal stimulus. And it's really applicable to certainly anyone that's a homeowner. So the forbearance is intended to give someone relief of their current payments to try to help mitigate some of the effects, obviously, for those that are out of work due to being furloughed or laid off, small business owners that have had to close their doors. We all have neighbors that are in this position. You see it on the news every day too, and it's a huge part of our population. So really was something that was absolutely necessary to help folks just make it through this short term.
Right.
So as far as who's part of that group, would really be anyone that owns a home with a mortgage on it that is being financially impacted by this COVID situation, and that's a pretty broad net, and so, Consumer Finance Protection Bureau, or CFPB, is really the one that's kind of putting out guidelines around the CARES Act and the forbearance piece. And there's some general sort of rules to follow or informational pieces. We'll put the link to that, I think, on this, if you're going to post this on your social media or whatever, so that anyone that's watching this can have quick access to the CFPB's guidelines around the forbearance.
Perfect. That's actually a great segue to my next question. If somebody is thinking, hey, I'm in some hard times, I'm not sure what's going to happen, how do I even apply? How do I go about even taking advantage of these programs?
Yeah, so the first thing is to contact your loan servicer. And it even, it says that on the CFPB website. They're not, while the feds have put forth the policy and put it out there, it's up to really the loan servicers to then execute on that policy. And everything, again, has happened at pretty lightning speed. So one of the things is check the CFPB site again, just to kind of answer some basic questions about what is this before I engage in it. But then as far as directly looking to get that assistance, you'd want to call your loan servicer or go on the website, but probably best to call and just understand that they're all slammed right now, managing through a lot of this. So you're probably going to go through a frustrating process of sitting on hold for a long time, depending on who your servicer is. But that's really where to start as far as that goes.
And along those lines, a lot of questions I get from folks are, how is this going to affect me? Should I take advantage of it? If I can, string things along and make ends meet, should I, or should I take advantage of it? What repercussions do we have in the long run?
That's probably one of the key things right there, Dana, is like, as a lender, this is new for all of us. And we're just starting to see, I've seen probably 2 or 3 examples just this week of clients that for various reasons are looking to refinance, one of which we'll talk about a little bit of kind of where the market is. But we're just starting to see some of these situations where the forbearance is showing up on a client's credit report. So one thing that's really important to note is, first and foremost, if you need the assistance, absolutely, that's what it's there for, right? So, if you don't have income right now, that's obviously something that you need to take advantage of so you can get some kind of relief. That's what it's intended for. But I have seen some stories around, some servicers that have implemented forbearance on clients proactively, without really any documentation. I mean, they're pretty much doing it verbally over the phone. And I think I've had some clients come back to me now that were saying like, hey, we didn't request a forbearance. I'm gainfully employed. We just brought up some concerns to our servicer. If something were to happen with our employment, kind of how can we be proactive and plan for it? And they then applied for a refinance after the fact. And we're seeing that their mortgage is in forbearance on their credit report. So that was actually put into effect by the loan servicer based on the phone call made by that client, just asking questions. But they didn't sign anything. They didn't request. They never used the word forbearance. And so there's another side to it, to your question I wanted to bring up as well, is understanding if you have the intention of refinancing your loan to get some of these market, record low rates, potentially for the long term, that's going to benefit you further out.
Right.
But you can weather the storm temporarily. I would definitely, based on the examples I've seen, take caution in going forward with one of these forbearance options if you don't absolutely need it. And the reason is, as a lender, whether it's a government-backed loan like an FHA or VA loan or USDA loan, or what's known as a conventional conforming mortgage, a Freddie Mac or Fannie Mae loan, lenders have to have a full 12-month payment history of agreed payments to be able to have that loan, the new loan, be eligible, whether you're looking to buy a home or refinance your current home. Now, if your loan's in forbearance, that may take you out of eligibility for a new loan for up to a year until you get that payment reestablished. So not something where I would say if you need the assistance, once again, I want to really emphasize the fact that that's what it's there for. But if you're on the fence or you feel like you can sustain short term, hopefully, we still don't have an end date to this, obviously, but if you can sustain out or try to weather the storm a bit, if you feel like you may want to look at refinancing your loan to a lower rate or potentially sell your home and purchase a home, that type of thing, just be mindful of the fact that, utilizing a 60 or 90 day, which we didn't talk too much about what I'm seeing on the forbearance options, but let's say you did a forbearance for 90 days, it'll be a year out from the time that forbearance is over with and you begin making payments again, that you would be eligible to get a new mortgage under just about all programs out there. So it's something to that's one of the things that using a platform like this, I'd want to make sure that folks are aware of that, because that's something they're not finding out until after the fact. And at that point, it's too late.
That's a great segue to my next thought. We're not just talking about forbearance on the dwellings that you live in. We are also talking about rentals. We're also talking about secondary vacation homes. Can you talk a little bit about that?
Yeah, I mean, we've seen some examples of clients that have multiple investment properties that have been placed into forbearance that, again, these examples, financially speaking, I would classify it as they don't need the assistance, but we'll say the servicer was proactive in a phone call and applied a forbearance to 4 various properties in one example. Mm-hmm. So the client as an active investor, while they have seen some payment shock due to the situation we're in, could probably survive through this hopefully relatively short-term, financial drought. But in their situation, they're blessed enough to be able to make it through that financially. Well, once they realized they're out of the market for a year based on qualifications with this, they're immediately contacting their servicers to try to have the forbearances removed. Once you're in it over a month, you now have over 30 days from your payment due date on the original. So they're kind of stuck with it at that point. So that's again, the other side of it. Just be aware of before you go into it if you don't absolutely need it.
Right.
But it does apply to second homes, rental properties. It's not just the primary home. It's really any loan that has a mortgage on it is potentially part of the option. So for those that, again, need the assistance, it's wonderful. But if you don't, I would just be aware of that part.
Right. And let's talk a little bit about how they're going to pick up the pieces once things return. Is interest going to be due or back payments going to be due immediately, or how typically are lenders proceeding?
So going off of what's on the CFPB website is kind of the framework. And they even indicate, and it's not fine print, but in some of the caveats on the website, it'll state, it's based on the product you have. It's a Freddie Mac, Fannie Mae loan, whether it's FHA or VA or USDA, they have different basic guidelines for each of those products. So that's kind of the first thing to be aware of. Mm-hmm. whether you can extend your forbearance an additional 6 months or 12 months is different for a conventional loan versus a government loan. But there's also 3 different framework repayment options. It's not a loan forgiveness. It's not a payment forgiveness. So those payments will need to be repaid back. They are stating there's no late charges that can be applied. But again, depending on whether it's a conventional loan or a government loan, there's different options of repayment. On the conventional loans, they have posted on there that you can either repay the forbeared payments, say you missed 3 payments, right? Those could be paid back as a lump sum, obviously, when you're ready to go back in, which would probably be a challenge for most people to say, I'm ready to start back up, and now I got to make 4 mortgage payments on the month that I come back in. But then there's also some different options posted on the CFPB side about basically deferring those payments to the end of the transaction.
We lost you, David.
Oh, sorry, I had an incoming call there, so the screen might have blanked out.
No problem.
But there's an option to defer those monthly payments to the end of the transaction. There's also the option to re-amortize your loan, and then also take that total amount of the missed payments, 3, 6, up to 12 months, and blend that into the remaining term of your loan, into the additional payments. And that's going to be, again, dependent on the product type of your loan and also how the loan servicer is equipped to manage that and what options they provide. So there's going to be certainly a difference between what's published on the federal side and the CFPB website versus when you call your loan servicer, what options they may provide you. But that's why I will say again, it's probably best to go to the website and review it as a consumer first, then deal with your loan servicer so you're properly equipped with what the federal guidelines are around the program, and you're not completely at the mercy of the other end of the phone when you contact your servicer. You want to make sure that you're armed with what the actual guidelines of the program are, and they're right there for everybody to see.
Yeah, the knowledge is power, right?
Definitely, yeah.
So that kind of brings me to my next thought. It is still possible to sell once things come back, and say a person says, you know what, I think I'm just ready to sell. I thought I was going to stay. I've changed my mind, or maybe things are just too difficult with how I can proceed. It is still possible to sell even with this forbearance, correct?
Certainly possible to sell your home, because they're definitely not going to have an issue with paying the existing loan off. If it was in forbearance, there's nothing that's going to prohibit you from selling your property and paying off that loan. Mm-hmm. The challenge is going to be when you turn around and want to purchase another home. If you're going to use financing for that, if you're in forbearance right now and selling your property to buy another home, keep in mind, once again, the guidance that you're going to need that 12-month payment history on your mortgage to be able to qualify for a new loan when you go to buy your next one, unless you're going to take the proceeds of your sale and pay cash.
Right.
Maybe you're downsizing in that type of situation and you have a substantial amount of equity that you're going to take out of a sale and then pay cash for your downsize home would be one maybe example. But good piece of information to know is before you go into the process of selling, if you're in forbearance, yes, you can do that, but that might cause you issues when you go to buy your next property, knowing you need to wait that year for eligibility on that, to have that 12-month payment history.
Yeah, depending on what you want to do. If you want to rent, that's fine, but definitely know what your objective is before starting the whole ball rolling.
Right. The time to find that out isn't when you're just about to close on the sale of your property and realize that you may not be eligible for a new loan.
Right. Exactly. Right. That's a phone call none of us like.
Right.
Yeah. So right now, it's still a great time to refinance, right?
Yeah, absolutely. I mean, what we're talking about is, the assistance piece under the forbearance for those that certainly need it. Mm-hmm. For those like you and I, we're fortunate enough to where our businesses have been deemed able to stay open and operational. While it's been challenging, for sure, but we still at least have I'm super grateful every day that I can get up and go to work, and be able to do that. And so there's still, the point being, there's a viable group of, let's say 2/3 of the population out there, in our local markets too. We have a thriving medical community, and we have state workers and county workers, and there's some large segments. There's quite a few of them And so the purchase market's great, and as what's gone on in the financial markets has driven interest rates down. For those that want to refinance, we're not at, I would say we're not at record lows, all-time record lows right now, but we're pretty darn close right now to some of the lowest interest rates in history.
Aren't they still artificially inflated?
Well, I'd say rates are a little bit above the absolute bottom that I think they would be, without going into a lot of the indicators around that. And it's because domestically, there's a lot of uncertainty out there around what we just talked about, the forbearance, the unemployment numbers that are through the roof since the Great Depression. So there's some uncertainty that I think are driving rates up above what they probably would be under other circumstances. If we were just dealing with some of the slumping in the financial markets and some of the bond yields that we're seeing, we'd be looking at rates that are a little lower, but you're seeing rates up a little bit due to, in large part, a lot of the uncertainty on the investor side. They're looking at a lot of losses when the payments aren't being made on the loans. The servicers on the other end of that transaction are still having to make those payments to the federal investors, Freddie Mac, Fannie Mae, Ginnie Mae for FHA loans. And so that's where behind the scenes, there's quite a bit going on there that's driving rates above what they normally would be. But still, with that said, we're at very near 40-year all-time lows right now. It'd just probably be a little bit lower under other circumstances. So we'll see what happens the rest of this year.
And there's a lot, obviously a lot of fluctuation right now. Every time I feel like we chat about what's going on with clients, there's from week to week, sometimes day to day, there's fluctuation in prices. So I'd like people who are watching to take it with a grain of salt, but can you give us an example of what rates are looking like right now for like a conventional 30-year?
Yeah, I'd say the best pricing that we're seeing right now is on the government loans. So if you're a veteran, if you have clients that are veterans, or you have friends and family that are veterans, the VA loans, especially on the refinances, they're able to take advantage of some rates that start with a 2, on a 30-year fix, and many examples. And of course, it's not applicable to everybody. So I'm always hesitant to quote rates because of the fact there's so many factors involved in it.
Right.
But just in general, in terms of based on someone's credit profile, based on the equity position in their purchase or refinance, there's a lot of factors involved in it, but they are, currently for a lot of situations, they're running into the 3s. But again, it depends on if it's your primary home, a vacation home, a rental property, purchase or refi. There's a lot of things involved, but I would say we're within striking distance of some of the record lows we saw in the first week of March, which were really historically all-time lows back then. And I think we'll probably, everyone's kind of guessing at, the best educated way they can, but we'll see what happens the rest of this year as far as how the market goes on rates.
Yeah. And I think that's what's really driving any activity in the market from what I see at all. If we were in this situation and had substantially different rates, perhaps we wouldn't have as much activity, but it's still a very active market.
Yeah, definitely. I mean, that's to the point, there's still a lot of folks out there that are gainfully employed. Their businesses are able to run. Everyone's having to adapt to these circumstances, being on phone calls like this and just operating differently. But, there's still, a pretty large chunk of the populace out there that has a, functioning job they're able to go to every day. And those are folks that advantageously have a great position where they can buy or sell, they can refinance. And again, I'd say as a home buyer right now, the markets that I'm seeing that are the most active right now are really like in the first time buyer space. And that's different in every market as far as what that represents in a price point, certainly in different parts of Sacramento or Placer counties, certainly different parts of the state. But that's still a big thriving market. And with uncertainty, renters right now, maybe their landlords are looking to sell their property, that type of thing. So aside from owning a home just being a much better long-term financial move than paying someone else's mortgage as a renter, that's where I'm seeing the most action is in those price points right now. So when you have uncertainty, what's a better time to create certainty through fixing a 30-year payment that can't change on the principal and interest for 30 years, at one of the record all-time lowest interest rates. So you can kind of gain control of your future that way. If you're paying rent right now, obviously with the demand in Sacramento, as you know, and lack of supply versus demand, there's a lot of pressure on rents going up, and that's been on the news as well. So if you're on the end of paying rent versus collecting it, your objective should be to minimize that timeline that you're sending those paychecks to somebody else's loan payment and start sending them to your own loan payment, and kind of going on that path. And that's where I'm seeing that action. But pretty much all price points right now, if a home is priced competitively, I mean, I'm seeing it as a lender anyway, listings still getting multiple offers and quickly when they're priced in the threshold of what you would call like a competitive price point.
Yeah.
And they're in good condition. I mean, they're going, I haven't seen a slowdown there at all, even under these circumstances.
I agree 100%. And you know, what's interesting to me is the luxury market is still going strong. There really isn't very much of a difference from a normal day to day. I mean, as you know, luxury market has a smaller buyer pool. Anything in the jumbo price point, which is, you know, roughly 600K and up. We're seeing longer, typically we see longer times on market. That's not changing. You know, actually the times on market are, you know, average sort of a month and a half, and they're moving depending on the price point and the location and a lot of other moving parts, but it's going strong. So I think we have a thriving market, and there's still a lot of opportunity for people that want to purchase, especially those, like you said, that are gainfully employed, that have a stable income from, you know, whatever aspect of workforce that they're in. Sacramento, I think, is fortunate in that way. We do have a strong political and state sort of hub here. We have a lot of nurses and state workers. So I'm positive that we'll get back to work as usual really soon. But I think people are lacking the information, and that's really why I wanted to do this, so we could provide people with, you know, not just optimism, but a reality check of what's going on, so they don't talk themselves out of it. Because I, like yourself, like to be a resource and hopefully answer these questions for people.
Yeah, well, let me flip it on you a little bit here, if that's okay. I had a couple questions for you, because, you know, on a day-to-day basis, operating as a realtor in Sacramento, how are you managing through this with your clients? So if somebody's watching this video right now, you know, one of the questions because I know as a lender, I can operate most of what I need to do from a confined space or remotely. And, you know, we're dealing with mostly on platforms and computers, but while I love to meet face-to-face with clients, I don't necessarily have to. But for you, when, like, say someone's looking as like a home seller, you know, how have you had to adapt that? And, you know, how's that been going on the last month to almost 2 months now, as far as like with the listing side and maybe working with buyers too?
Yeah, thank you. It's actually been a unique experience, but the old phrase, you know, can't keep a good dog down. So we're still working. We're doing everything we can to continue doing business as usual. It's just different. So we're still fully functional. And what a great time to go through something like this. Thank goodness it wasn't even 20 years ago, because today we have such amazing technology. Everything I need someone to sign or someone needs to review, we can do electronically. Everything that we need to do for a transaction can absolutely be done electronically, and it's kind of amazing. So from the very beginning, when I talk to a seller, we can do the listing appointment on Zoom. They can walk me through their house virtually with their phone camera. If need be, I still can go into homes. I'm allowed to go into homes. Buyers are allowed to come into homes, but from the very beginning, we take precautions. There's a limited number of people that are allowed to go in home at a time. Sellers are turning on all lights. They're wiping things down before and after every viewing, whether it's for a buyer or an agent or an inspector. We are proceeding with protocols of gloves. I provide all my clients gloves. I do have a few masks still that I'm providing for those that feel they need them. Booties, hand sanitizer, hand wipes, wiping down doorknobs, the lock boxes, anything necessary. And just taking every precaution to make sure people feel comfortable and safe, because this is not a normal space that people are accustomed to purchasing in. So if somebody feels like, gosh, you know what, this is such a big purchase, how on earth would I possibly buy a house virtually? That sounds crazy. I get it. I probably wouldn't be able to do it myself. So we're taking every possible opportunity to do it safely virtually. And if we have to get in, then we do it safely going into the property. And even open houses we're seeing are coming back. I think it's a bit rare right now, and I'm not ready to go there, but a lot of agents are, and buyers are. But you know, we're following protocol. It's different. People are waiting in line, like going to Costco. You're waiting in line. You're getting hand sanitizers or gloves, and you're being instructed on how to flow through the home. Maybe you have a guide, and then you know maybe there's some cookies in the garage, and you ask some questions on the way out. But we're managing. We're fully functional. People are still proceeding, and the people that can purchase, this is a great time. People have an opportunity that they haven't normally had during a spring and summer. As you know, we've done many deals together, and sometimes we've had to fight tooth and nail to get our offers accepted. And we're not seeing as much competition because the people that are in the market that have these opportunities to purchase are smaller. I mean, to be
Yeah.
very honest, I mean, you know as well as I do, just the quantity of people that are not impacted right now is substantially smaller. So late spring, early summer, what do we always see? Multiple offers. We
Yeah.
see a dogfight, especially for that entry level, right?
Yeah. I would agree with that, Dana. So I mean, it's good to hear that like functionally we're able to do a lot of the stuff. And a few things that came to mind when you were going through that was number one, especially with the technology, the advent of so many like website type of services, quote unquote services for real estate and lending. One of the things that I found is having that high touch service level couldn't be at a more important time than right now. If you're looking to buy or sell a property, to have someone like yourself that's in the community, that is boots on the ground, looking at a property, whether it be doing a Zoom call like this and like understanding what your client's needs are when you're trying to find them the right home, and
Right.
scouting that out. If they're not able to go in there physically, they have somebody like yourself that's able to do that. And that's probably more important than ever. We take it for granted
Right.
previously, but that's something where having someone in the community that's a local professional in the market is going to be more relied upon now more than ever, I think. And I'm
Absolutely.
already seeing that.
Yeah.
Um,
There,
so
there's a lot of sellers that are also on the fence because they're unsure, or maybe they have questions, and there's even opportunity that you don't know about. So if it's, you know, if you have your own real estate professional that you're working with, fantastic, reach out to them, ask them. Those that are working with me, they can reach out to me, and there are off markets. There are a few properties where sellers have said, you know what, it the prices are great. It is technically still a seller's market right now. So if you have someone, I'm not willing to put it on MLS, but if you have someone, let's talk about it. You can bring them in. And thank God we have these things, right? So this
yeah,
is,
right.
if I can see through my green screen here, this is this is the best tool ever in this day and age, because you're right. When people have these questions of, wow, there's a house that fits exactly what I'm looking for down the street. I can't get there because I'm working, or I maybe don't feel safe. Can you do it for me? That's what we do. That's part of the job, right?
Yeah, totally. So, yeah, and on that note, that's one of the other things that was coming to mind is that, you know, while we're all living through this process, we again hope it's as short a term as possible, right? And we can go back to whatever, you know, it's going to be, there's going to be a period of time for sure that things are going to slowly adjust back,
Hmm.
you know, maybe not 100% back to the way they were as far as how people interact with each other and how stores and restaurants and all of that works. But in terms of getting the economy back up and running and allowing people to operate, you know, that's inevitably going to happen here pretty soon. One of the things that, you know, prior to the first week of March, we quickly forget how much demand there is for housing in our local market, you know, especially in Sacramento and surrounding markets from the Bay Area, just growth in general in our state and in Northern California. And while obviously I don't want to discount the serious nature of what we're going through economically, with everybody being forced to shut down. But that's the key difference. That another thing I don't want to go, I guess we probably don't have time on this call to go too deeply into, but that keeps coming up is kind of a comparison already between what we were dealing with in like 2008-9 versus what's happening right now. And there's really a key difference between the two. We don't, there was a financial meltdown that caused a compounding effect of things to start to unwind with our economy,
Yeah.
versus being forced to stop operating, and when
Right.
everybody is being forced simultaneously around the world to just stop, obviously things are going to start to unwind as a result of that. But optimistically, I don't believe that that's going to change the demand for housing as much as it would change the demand for food or anything else that's a staple of what we need. And so from that perspective, I'm still very bullish on our local housing market, and I'm not comparing it, and I may stand corrected at some point in the future, which is fine, but I still believe that, we have a thriving and a pent up bit of demand on housing in our local markets that is still there right now. We're seeing the homes get multiple offers.
Absolutely.
But even more so as the machine of our economy starts to come back on, I think you're going to see that even more. So it is, from that perspective, a great time to purchase while you're not competing with as many people out there right now, if you're in a position to do so.
Absolutely, exactly. There's actually, this might be a great time to show you some graphs, if I may. If I can share my screen, bear with me just 1 second here. You with me? Okay.
I am, yeah. There's no better time to experiment with the technology. Let's do it.
Exactly.
All right.
So right here, I'd like to just point out, this is a graph from last April to this April. And what we're looking at is the for sale and sold. So the light green is the for sale active. The dark green is the sold. And you can see, yes, there is a drastic difference from last year to this year, but you can also see that there's a huge number of people that are still purchasing. It's still a seller's market because the pendings, if you can see the red there on the far right graph, the red, that means they're going pending really quickly. So all these things make it a seller's market. Right now, April property sales, there were 952, so 19% lower than, let me see here, then the sales, if I can move my screen, last month. Okay, that's last month right there. Another thing which is interesting is the inventory. So all Sacramento counties combined, the average sold price per square foot, which is important to look at. This is what appraisers look at. This is what agents, when I have a client who asks me, hey, is this a good value? I'm not looking at the price. I'm looking at the price per square foot. So this is the real difference. Look at this, 419 versus 420. Those are very, very close. This is another indication of why we're experiencing a seller's market. The price per square foot is actually slightly higher now. So that tells us people are selling, people are getting the prices that they're asking for, sometimes multiple offers, sometimes bidding wars, but they're also not staying on market very long, which leads us.
What do you attribute that to?
I attribute that to people who are able to buy. They're still buying. The markets that are attractive are going to always be attractive. There's always going to be people that need to sell and people that need to buy. An attractive home is still an attractive home. This is, like you said, this is artificial. We've put ourselves in lockdown. We are not relying on a market to tell us what's happening. We are telling the market what to happen. So what is happening. So when this is lifted, I have absolute confidence that we're going to go back to more of the frenzy that we typically see in this time of year, the late spring, the early to mid summer. Right now, what we're looking on is the average days on market, 17 days.
Wow.
The average day on market. And this is for all Sacramento County. But compared to last year, 29 days on market. So when people are thinking, gosh, if I buy a house right now, how long is that escrow going to be? Because is it going to be delayed because of the circumstances? And the answer is no, it's not going to be delayed. You yourself, a fantastic lender, you're writing them all the time, these approval letters, and seeing these things go 21 days, maybe less, but maybe
Mhm.
30 days. But wouldn't you say that's your average right now?
Yeah, I mean, as far as fortunately being able to turn, closings and escrow periods, with especially with the addition of so many layers of compliance guidelines and disclosures and whatnot. Um, Several lenders like ourselves have been able to, manage a really efficient business on that end of things and still facilitate very quick closings. So for that, I'm really happy about our results there. The days on market piece is pretty crazy to see that as recent as just the info you're getting in the last 30 days. And that's really at the peak of reactionary to this COVID pandemic lockdown. You're seeing days on market at one of the shortest periods that we've seen in the last over a year.
Isn't
So
that amazing?
that's a pretty crazy stat. Yeah.
It is. And I think that's why I wanted to share this here. I don't need to share that anymore. I can stop that. But that's one of the reasons I wanted to share that. I think graphs are really impactful because data doesn't lie. Facts don't lie.
Hmm.
You can talk to 100 people and get 100 different answers, but you look at the data and it's only going to say one thing.
Hmm.
There are a lot of people feeling uncertain, and that to me shows certainty. The market is still strong. There's still people purchasing. And back to our previous point, I think it's a fantastic time. If you know what you want, where you want, you're able to purchase, you still haven't lost your ability to purchase or your desire. Now is the time you can do it with not only confidence, but less competition.
Yeah. Great rate environment. About probably a third of the folks are off the fence in terms of those that you're competing with as a seller and a buyer.
Hmm.
But you still have, some really ideal conditions to purchase. And like you said, the numbers are speaking for themselves in terms of inventory still being very low, and also the turn times on the listings shows you there's a lot of demand for housing still. So very
Yeah.
cool.
The another interesting point, just from month to month, last month was obviously a little less certain than this month, but I think every month moving forward, we're going to have slight upticks. So last month's pending versus this month's pending, pending properties that are in escrow, that's what that means. So we're up 4.3%. So I have every reason to believe that next month we're going to be up even a higher percentage of pendings.
Yeah. Wow. Yeah, that's good. I mean, it's on point with what we shouldn't, I guess, be surprised by those stats, because that's really kind of in alignment with where we were 60 days ago.
Right.
And so that hasn't changed things. Again, ideally and cautiously optimistic that we're not dealing with this type of lockdown situation where the economy is forced to stop for a large part of the remainder of this year. I don't think it will be, but good to know that we still have a very vibrant housing market, and that a lot of folks are positioned, those that are positioned to refinance or buy a home or sell a home. Nothing to really be concerned about. The fact that the numbers are showing that there's still enough folks out there to support the market, while we're
Absolutely.
still being sensitive to the large number of people that are being heavily affected by what's going on, obviously. But there's a larger group of folks that are still out there in the marketplace that can transact business. So it's a good time to do it if you can.
If you can, absolutely. And again, I think the biggest piece I want people to walk away with after watching this is you just need to inform yourself, whether it's speaking to us. You're welcome to reach out. We'll have our contact information here for everybody to contact you and me if they need to. But if we're not your resource, then contact someone, because I think a lot of people are listening to the doom and gloom and letting that seep over into other areas of their life, and it doesn't need to seep over into the real estate world, because we're still feeling an uptick, and hopefully people will be able to do exactly what they want.
Yeah. And then again, we'll post the link to the CFPB website. So folks that want to can just have one click and get the access to the information we started the conversation with too.
Absolutely.
Cool.
David, thank you so much for joining me today. I really appreciate all your knowledge and your professionalism, and you as a person, you're always fun to talk to. So thank you.
My pleasure. Thank you very much for having me on.
Take care. Bye.
Bye.